Today, let's talk about interest rate and how it affects your buying and spending. Hello guys, how's it going? Will here. Welcome back to the channel. Hope you guys are doing fine and staying indoors at home. So today, let's talk about OPR. OPR stands for Overnight Policy Rate. This OPR is what governs the interest rate across all banks in Malaysia. OPR can be said as an economic indicator, whereby if the OPR is high, it would mean that the economy is doing good, doing well. If it's low or it has a reduction in OPR, that would mean the economy is in trouble, or there's probably a recession or uncertainty going on. So this OPR is set by our central bank, Bank Negara Malaysia, BNM. So what happens is when the bank announces a reduction or an increase in OPR, usually this happens overnight. That is why it's called OPR. So basically OPR is interest rate whereby banks lend money to other banks. So for example, if let's say Bank A is doing very well, they have the funds to lend to other banks like Bank B, which is not doing so well. So this is the interest rate that is being applied when Bank A borrows to Bank B. Same goes with in between other banks. So whenever there's a fund transaction going on, usually OPR dictates the interest rate in which a bank borrow to another bank. This rate, like I said earlier, is an indicator to many things. First of all, an indicator to our economic performance. It also can affect the employment rate, price of goods, affect the interest rate, like I mentioned at the start of the video, in terms of saving and spending. And this can affect everything that I just said on a very minor level or to a very major level. A decrease in OPR usually means that you are encouraged to spend your money. Because of this, because of the decrease in OPR, your fixed deposit rate or your FD rate when you save your money is considerably lesser, and also the loan in which you apply for, let's say to buy a car or to buy a house, is also lesser. So you can actually say that if you encounter a decrease in OPR, you are less encouraged to save and more encouraged to spend. So if you are in the market to buy a new house or to buy a new car, this will be the good time for you to sign up on a loan, because the lending rate is considerably lower than when you have a higher OPR. Same goes vice versa. If an OPR is increased, you are more encouraged to save your money than to spend it. So given an example like this, in this current time when we are dealing with an illness and there are a lot of uncertainty in the market, like currency fluctuation and whatnot, usually the government would reduce the OPR in order to stimulate economic growth by having you spend a bit more money or putting a bit more money in your pocket. So because of this, when you want to save your money, try to save it before there is a decrease in OPR. It is not easy to predict when this change in OPR can happen, because like I said, it happens overnight. It can happen with a blink of an eye. We usually would not announce it in advance, but there are telltale signs that will tell you that a revision of OPR is coming. The last revision of OPR actually happened the beginning of this month, which is early, somewhere around the first week of March. And because of that, FD interest rates have been going down, but at the same time, the base lending rate of all loans is also going down. And historically, looking back at this chart here, BNM has do more decrease in OPR than increase, especially during times of economic uncertainty, like the 2009 economic crash. You can exactly see here there is a steep drop in OPR. It's a way of government telling you that, oh,
please go and spend your money. There's no point saving now. It is a good time for you to buy property or car or anything that you want to take loan, like your personal loan. So it's a good time for you to do that. Might as well you take the chance now.
So this is one way government incentivize you to spend your money rather than save your money. But even though with a drop in OPR, our interest rate for fixed deposit savings is still better comparatively to Western countries like US. In US, it is not easy for you to find an interest rate of higher than 3.0 unless you're investing like millions and millions of dollars or ringgit. But over here, even with a simple 10,000 ringgit, you can easily find an interest rate of about 3% already. So it is better for you to try to lock on to banks that give you a good interest rate for your savings before a drop in OPR happens. So this is how interest rate on all banks are being monitored and governed. By looking at the OPR, you are able to make your own judgment and able to decide whether it is good time for you to take up a loan or start saving. In whichever case, right now, in current time, it is not really a good time for you to take on any loans for any big purchases, especially if you are living paycheck to paycheck. Start saving your money at least 3 to 4 months of your monthly salary, as I expect this OPR to continue dropping after the government has gone through some economic stimulus program, which could be somewhere between this month or next month. So take the chance now, start saving your money, put your money in FD if you can, for the good chunk of extra change that you never had to work for. So I hope this guides helps you out and give you an insight on what is OPR and how it affects the interest rate of spending and buying. If you like this video, feel free to hit the like button as it will help out with my YouTube algorithm. It actually helps people to search my channel more easily. Hit the subscribe button and also ring the notification bell for any future content. And stay safe, stay indoors, and I'll see you in the next video. Take care.